The Reserve Bank has kept interest rates unchanged. This means the repo rate, which is the rate at which the central bank lends to commercial banks, remains at 6.5%, while the prime rate, which is the rate at which commercial banks lend to the public, remains at 10%. The local currency had been firming ahead of the decision, with the market largely pricing in an unchanged decision. So what are the implications of the latest decision? I'm joined on the line by Jameel Ahmad. He's from FXTM. So, Jameel, on Monday, the market was factoring in a 55% chance that rates would increase. But by yesterday, it was talking about an 18% chance. And in the end, we breathe a sigh of relief that rates were unchanged. And with that, we also saw the local currency remaining on its firm trend. Your thoughts on the decision?
Well, the South African rand is the best performing emerging market currency today, and as of 1 hour ago, that still remained the case. There's been a lot of dollar weakness that has helped. However, the markets look positively on the overall outcome that the SARB have been able to avoid the pressure to raise interest rates at this time, which is something that other central banks in the EM space, such as Turkey and Russia, were not able to do because they both recently had to raise interest rates. The most positive news, actually, aside from interest rates being left unchanged for now, is that the inflationary pressures are unexpectedly declining in South Africa, which was something that we weren't expecting this week. And this has potentially been able to provide the SARB some breathing space when it comes to the pressure to raise interest rates. And perhaps now with the dollar weakening as well, they'll be able to stand unchanged for some time to come.
Some suggest that with Turkey, Russia and Argentina having raised rates in recent times, this would also place some pressure on other emerging market central banks to do the same. But why should South Africa or any other emerging market country, for that matter, have to be placed under such pressure when the economic fundamentals of these countries aren't the same?
Exactly, and that's a very good question to ask. So because of the status of the South African rand as a high-yielding currency, there has been expectations that due to the weakness in the rand, which is around 15% year-to-date, today, that it would need to follow the path of Turkey, Russia, Argentina, and speculation that Brazil might eventually need to do the same to raise interest rates to prevent inflationary pressures and also to provide the currency with some reprieve and to limit the pressure on the currency. However, SARB are able to maintain a resilient stance for now. It does appear more optimistic that trade tensions between the US and China, which are really hurting the external environment and again weighing on high-yielding currencies, and also that the greenback, the US dollar, could be turning the corner and heading lower against its counterparts, and this will provide some breathing space and potentially some more good news for the South African rand that it can continue to gain over the sessions ahead.
Before we continue with the South African situation, just explain to us, we do see that the US dollar has been declining a little bit, but on the other hand, we've been seeing the 10-year US Treasury yields rising. It doesn't make sense to me. Can you try and explain what's going on there?
Again, this is a very good question. So dollar's been declining. One, there's reports circulating that Federal Reserve Chair Jerome Powell, I haven't seen this myself, has commented on Fed central bank independence, which is something that is quite unexpected, and I'll have to see if this has been confirmed. And secondly, that despite another escalation in the rhetoric when it comes to the China-US trade tension, there's optimism that a resolution will eventually be sourced, which has encouraged traders to begin taking profit on the US dollar. So that's why there's weakness there. When it comes to the US Treasury yield, again, there is still some speculation that the Federal Reserve will not be as active when it comes to U.S. interest rate policy in 2019. And there's a belief as well that inflationary pressures will not increase at a fast enough pace in the United States, which is why investors are looking more at the Treasury yields, perhaps in government bonds, and they're beginning to weaken their positions on the U.S. dollar. But very good news for emerging market currencies and global counterparts. Even the euro and the British pound are trading near 1% higher on the greenback weakness.
Mm-hmm. So now in the second quarter of this year, the Reserve Bank records that our current account deficit narrowed to 3.3% of GDP. That compares with 4.9% of GDP in the first quarter. And there's been talk of a gradual sell-off of South African capital assets like your stocks and bonds. Do you have any concerns about the country's ability to service this deficit, especially when investors get jittery with emerging markets every so often?
Not necessarily, because it's nothing new, and it's something that's quite similar with other emerging markets, particularly with the currencies we've seen weaken a lot over the past 2 months, which includes the Indian rupee, Indonesian rupiah, of course we've mentioned the Turkish lira, Russian ruble, and also the Argentine peso. As long as the market turns more negative on the US dollar, and that investor sentiment as a result of this increases towards the emerging markets, there's no reason to be concerned about the public finances and the government finances of these countries. South Africa does have the budget deficit problem, and it does have a currency that belongs to a market with high currency account deficit. However, it's not the most sensitive to this, and there's other markets that have been more sensitive, and interestingly, it's the Russian ruble that has been pinpointed out a lot, which is why the ruble has weakened over recent weeks and months. And again, this is nothing new for the Russian authorities either, who have been used to sanctions, economic sanctions, and a host of different reasons to see weakness in the currencies, and they haven't panicked, so there's no reason for South Africa to necessarily panic because it's not an isolated problem for the South African government.
Right. So now the Reserve Bank Governor Kganyago, he seems to say that South Africa's economic problems remain largely structural, which he says requires government to step up. And indeed, we're beginning to see rapid moves this week. On the one hand, the cabinet has approved the third installment of the mining charter. And then on the other, President Cyril Ramaphosa is set to announce an economic stimulus plan for the country tomorrow. Of course, we don't know yet what those details are, but what are your thoughts and your hopes about these moves that are taking place?
Fiscal and infrastructure stimulus from the authority level will be very much welcome. Certainly will be supportive when it comes to improving domestic economic momentum. With the unfortunate news over the past couple of weeks that South Africa did re-enter a technical recession, it would be a very appropriate time. And also it's a positive that the SARB did not raise interest rates today, because with the news that the economy has recently hit a technical recession, and because the pressure is on for more fiscal and infrastructure stimulus, South Africa actually needs lower interest rates now than it has needed in the past. And if the SARB did raise interest rates today, it would have been negative for borrowers and it would have been negative for consumers, although it would have been good for savers. But South Africa does need lower interest rates, or at least interest rates that are left unchanged. So these factors should be more positive for the economy over the medium term at least.
Coming back to the currency, if there are signs that South Africa is able to pinpoint potential growth areas and waste little time in implementation, and if the midterm budget reads well, what could that mean for our attractiveness as an investment destination, and what could that do for the rand?
Well, aside from the status of the South African rand as a high-yielding asset, so when investors are attracted towards risk is on, their buying attention turns towards the South African rand. If these issues or structural challenges could be resolved, it would increase the buying sentiment of the currency. And actually, interestingly enough, there was a development in Turkey today where the Turkish finance minister announced that they would have to cut back on government spending and other fiscal reforms because of the Turkish lira crisis. So investors are very much now looking for a currency that still offers some yield. And if they see proactive measures to improve the domestic economy being brought forward from authorities, it could really have an impact on the buying sentiment for the rand, which would of course be positive for the currency as well.
That was Jameel Ahmad. He's from FXTM.